You're supposed to put the first 500 in the safe and lose the combination.
What is up, guys? It's your boy Kev. Welcome back to yet another video, and in this video I'll be showing you guys how to get better entries when you are trading the markets. Now, the very first thing that you want to do is to determine the trend, whether the market is actually pushing to the downside or pushing to the upside. Right here we can clearly see that the market is making lower lows and lower highs, telling us that the animal that is controlling volume is actually the bears, and we have to push with the market to the downside. So the market is making lower lows and lower highs, and you guys can see that the moves to the upside are smaller in comparison to the moves that are pushing to the downside. So you want to focus on moves that are pushing to the downside. So when the market is pushing to the downside, you focus on sells, and you just want to continue pushing with the market to the downside until the market actually starts reversing and showing us indications that it wants to start pushing to the upside. So after identifying where the market is going, you want to mark your very last low. The reason why you want to mark your last low is because this is actually a support level. You can clearly see that the market actually came to this level and it started pushing all the way to the upside. And what we want to do right here is to drag our support level like this and wait for the market to push all the way to the downside, come back to our level and see how it reacts to this level. So when we actually let price push all the way to the downside, you can clearly see that it came all the way to our level right here. And what you want to do is hop onto smaller time frames like your 1 hour chart and even 30 minutes chart, where you will actually see price pushing all the way to the downside like this, making higher highs and higher lows. This trend right here would be an uptrend on a smaller time frame. And once you see that the market is actually changing in character, breaking structure, or showing you signs of reversals, this would typically be your head and shoulder setups or your double tops or sometimes even triple tops. So the market has to show you some kind of a reversal when it comes to this level. If the market actually breaks this level impulsively and start pushing all the way to the upside, selling positions are going to be invalid, and you shouldn't be selling the market because the market is pushing to the upside. Instead, you want to see the market slowing down when it gets to this level, showing you signs of weakness and starting to break structure and push into the downside. And that's when and only when you would actually start selling and pushing with the market to the downside. So when we let the market run, you can clearly see that we have a head and shoulder setup right here. When I zoom like this, there is a head right here, a shoulder and a right shoulder. And that's when you would actually start preparing your short positions to push with the market all the way to the downside. And we can clearly see that the market pushed impulsively to the downside, and this would have been a nice selling position. And the reason why we took this sell was because price actually showed us signs of weakness, that it is not pushing to the upside anymore. It is now actually starting to push to the downside, and that served as a good indication for us to start pushing with the market to the downside. So when we let the market actually run, we can see that it pushed all the way to the downside, and what we want to do is to keep marking our lowest levels to see if the market is going to come back to that support level, which will be acting as a resistance level, and continue pushing with the market to the downside. So after this push to the downside, what we're going to be doing is marking our support level right here and waiting for price to actually come back to this level to see how it's going to react. Remember, we want the market to push to our level and show some kind of sign of weakness. Either see a head and shoulder setup where the market is actually failing to keep making higher highs and pushing all the way to the upside, or making a double top where we have equal highs, or a triple top where the market is failing multiple times to push above our level. So when we let the market push all the way to the downside and come back to our level, this is something that you would typically see within the market. So you can clearly see that price is starting to touch our level right here. Remember, what we want to see at this level is some kind of reversal. So price has to start failing to push all the way to the upside, either making a head and shoulder setup, a double top, a triple top, or a break of structure. So as soon as we see that price is actually breaking structure or it's changing in character, that's when we would actually start looking for short positions to push with the market further to the downside. And we can clearly see the price actually broke our support level right here, and it started pushing all the way to the downside. And this would have been another beautiful sell to push with the market all the way to the downside. Now, when we're looking at a buying market, you can clearly see that the market was pushing all the way to the downside. It started breaking structure and reversing to push all the way to the upside. Right here, we had our break of structure. and price came to this level. It gave us our double bottom, and that's when it started pushing all the way to the upside. We have a double bottom right here, we have a touch right here, and another touch, and that's when the market started pushing all the way to the upside. In order for us to continue pushing with the market to the upside, we would actually want to see price breaking its highs, coming back to this resistance level, which will now have turned into a support level, giving us some kind of reversal right here, and we continue pushing with the market to the upside. So what we're going to be doing in this instance is that we're going to be marking our very last high, this high right here, which was a resistance level. Price actually came to this level and it started pushing all the way to the downside. So we're going to mark it as our significant level to see how price will actually react when it continues pushing to the upside. So what we want is for the market to continue pushing to the upside and break this level right here. And when it comes back, it has to show some kind of change in character for us to continue pushing with the market. This would actually simulate a inverse head and shoulders, a triple bottom, or a double bottom, and that's when we will place our trades to push with the market all the way to the upside. So when we let price run, this is something that you would typically see within the market. We have a clear break of this resistance level right here. What we want is for price to continue pushing all the way to the upside, showing us that there are strong buyers within the market and waiting for price to come to our level, show some kind of weakness before we can start looking for our buy positions to push up with the market. When we zoom to see what the market actually did right here, you can clearly see that the market pushed all the way up, came to this level, and it gave us multiple wicks. So these wicks actually indicated that price was failing to push to the downside, and this is a strong level. On a smaller time frame, you would actually see that price broke structure, and that's when you would take your first buy to push with the market to the upside. What the market usually does is that it would give you a small corrective move like this, but later on you would realize that this is just another strong corrective move before the market is going to come back to this zone right here, give us some kind of indication that it wants to continue pushing to the upside, and that's when you would actually take your buys to push with the market to the upside. So this is something that I was actually telling you guys about. Of course, I knew that price was going to come to this level, but what I'm actually saying is that sometimes you have to realize that the market will give you a small corrective move, but that small corrective move is actually a larger part of a bigger corrective move before the market will start pushing to the upside. And when the market actually does something like this, it is a very strong indication that it will continue pushing all the way to the upside for a longer period of time. So if the market is giving you a strong corrective move like this, that's when you should know that the market will push to the upside for a longer period of time. And it might take 3 to even 5 weeks pushing all the way to the upside. Of course, there are going to be corrective moves in between, but the market will take longer pushing to the upside. And for the next 2-3 weeks, you should focus on buys to push up with the market. And price made corrective moves in between, but it continued pushing all the way with the market, and this is where we currently are. And what we would want to see right here is for price to actually give us some kind of indication that it wants to continue pushing up with the market. If price actually breaks this level right here, this will invalidate our buying positions to push up with the market, and you should wait for price to actually give you proper confirmation that it will continue pushing to the upside. Now, an important consideration that you need to make when you are trading this specific strategy is that, say that the market is actually pushing all the way to the upside, making higher highs and higher lows, and this is our very last high right here, and the market comes back down to its support level, and you would mark this as your resistance level that is due to turn into support when the market actually continues pushing to the upside. Something that usually happens within the market that you need to be well aware of is the fact that price would sometimes do something like this, push all the way to the upside, and when it comes to this level, it would give you a corrective move below this level right here before it continues pushing up with the market. So you have to be very careful when you are trading at these areas and looking for your buy positions, because sometimes price tends to give you a fake signal that it is actually starting to push to the downside, but it is not a push to the downside. It is just a corrective move where price actually comes to its support level right here, this demand zone right here. It hits this level and it continues pushing to the upside. So a lot of people would actually take this as a short signal because price is showing some kind of weakness, but as long as price is not breaking structure, you have to be very careful because it might continue pushing to the upside. So that's why it's very important to consider all these things before you actually just start selling with the market just because price is at a resistance level. Just because price is at a resistance level, I always say, it does not mean that it's an interest signal for you to start selling with the market. And just because price is at a support level, it is not an interest signal for you to just buy with the market and think that the market will push to the upside. There are a lot of things that you need to consider, and you have to really look at what price is doing. Price action is very important when you are trading this specific strategy because you are looking at the behavior of price and how price is moving. So whenever you're looking for pushes to the upside, so you have to be very careful when you mark your high that is due to turn into a support level. So this would be your resistance level right here. You have to be very careful with how you analyze this setup, because the market actually tends to make corrective moves at this level right here, which may look like some kind of weakness and that price is trying to push to the downside. But in reality, price is actually breaking to the upside when and only when it would come to your zone and give you a triple bottom or a double bottom and start pushing all the way to the upside. So whenever you're trading these types of setups, you have to be very careful that you apply the right things and you do not take single indications as interest signals to push with the market to the upside. This has been another great video. I hope you guys enjoyed. Subscribe if you didn't, leave a like, and I'll catch you guys on the next one. Peace.
You're supposed to put the first 500 in the safe and lose the combination.